The Reserve Bank of India has put out a report on the trend and progress of the banking sector in India in FY20, and this year's report's focus is broadly on the impact of COVID-19 on banking as well as non-banking sectors and also the way forward. We'll just take a look at a quick look at the highlights of the report that have come in. Firstly, the report says that during first half of FY21 and also during FY20, SCBs consolidated the gains achieved after the turnaround into FY 2019. Now, the gross performing non-performing assets ratio of banks declined from 9.1% in the end of March 2019 to 8.2% in the end of March 2020 and further declined to 7.5% at the end of September 2020. Talking also about the capital to risk weighted assets, the CRAR ratio of scheduled commercial banks, it strengthened from 14.3% at end of March 2019 to 14.7% at end of March 2020 and then further strengthened to 15.8% by end of September 2020 is what the report is saying. But the report also says that this is partly aided by the recapitalization of public sector banks and the capital raising from the market by both public as well as private sector banks. Additionally, talking about the net profits of scheduled commercial banks, of course, we know that there was a turnaround in FY20 after losses in the previous 2 years. But in the first half of FY21, the report says that the financial performance of banks was shored up by the moratorium, standstill in asset classification, and also the plowing back of dividends. RBI is also saying that the recovery process gained traction with the resolution of large accounts through IBC as well as the SARFAESI Act in FY20. Now, specifically talking about non-banking financial institutions, about NBFCs, RBI is saying that the consolidated balance sheet of NBFCs decelerated in 2019-20 due to near stagnant growth and also growth in loans and advances, although some improvement became visible in the first half of FY21 is what RBI is saying. Notwithstanding the marginal deterioration in asset quality, the NBFC sector remains resilient with strong capital buffers according to the report. Additionally, RBI is saying that going forward, the profitability of NBFCs may be dampened due to loan impairment, low credit demand and a tendency to preserve cash. So this is a word coming in from the RBI on NBFCs. But also talking about the way ahead for banks, RBI has said, the report has said that improvement in the health of the banking sector henceforth hinges around the pace and shape of the economic recovery. This is something that has been said earlier as well. The economic recovery and the recovery of various sectors will also determine the improvement in the health of the banking sector going forward. Now, also talking about the recapitalization need of banks going ahead, the report says that preliminary estimates suggested that potential recapitalization requirements for meeting regulatory purposes as well as for growth capital may be to the extent of 150 basis points of the common equity tier 1 ratio for the banking system. The report has also spoken on urban cooperative banks and also on the other banks as well. What they're saying for urban cooperative banks is that the balance sheet growth of UCBs moderated in FY20 on lower deposit accretion and muted expansion in credit, while their asset quality deteriorated. Increased provision resulted in net losses. This is the overall view that is coming in from the report, and these are the highlights of the report. And clearly the growth of the banking sector and the improvement, the recovery in the banking sector is what everybody will be watching out for, along with the economic recovery that we are seeing.